Hi, this is Ali Salarian, a broker at REMAX Success Realty, and I'm today with you to discuss 2 points. Recently, everyone is talking about our event happened in real estate market, and I believe they are important to discuss. Reason why? Because this is what the forecast for the real estate market is going to be. So, as you see in the screen here, two pieces of information or news, let's put it this way, or announcement came into the market. One is, which is the big one, inflation falls to 1.6%, making a case for larger Bank of Canada rate cut. So the first news is about the inflation rate for a month of September, which is below 2%. And this was by Global and Mail, I believe, on October 15th. So this is in the first news. And the second in use, which is already in this article, but I have Bank of Canada rate cuts website here. Oh, sorry, Reuters, which came with this article or news, talks about Bank of Canada to cut rates by 50 bips on October 23rd. Next move unclear. So today, as I'm recording, is 2020. Is October 21st. So 2 days from today, today's Monday. So most probably on Wednesday, we're going to hear, and they're going to be a meeting by Bank of Canada, uh, regular meeting, and they're going to be an announcement probably early morning. So yes, everyone agrees there is a cut, but the debate is whether it's going to be 25 bips or 50 bips cut. So the two news here, especially the first one, is very important, is indicating they're going to be a cut. So we know about the cut, but people in the market wondering whether it's going to be a small regular slim cut or a bigger one. So what I can tell here, everyone knows that the the inflation is very important factor, and this is how the central banks or Bank of Canada indicates whether to cut or do not cut or leave the rate as is, where the target was back then when inflation is going up to 8% at somewhere in 2023 or 2022. The target was to bring the inflation below 2%. So now the rate increase, which already happened starting from end of 2022 all the way till sometime the third quarter, between or second or third quarter of 2024, or first quarter of 2024, it gave a good results where we see the inflation is heading toward the 2%. Now, below 2% is what we're going to talk about. Now, all of development economies, including Canada, their target is to keep the inflation between 2 to 3%, not less than 2, not more than 3. More than 3 is causing inflation. I mean, an inflation might cause harm people and all of that. So that's why this is what we ended up after the COVID with higher inflation, because it started to go crossing the 3% going up because of the what happened, the interest rate cut, right? The the below 2% is not good news as well. Why? Because there is something called deflation. So deflation is the opposite of inflation. Deflation is where the value of the asset diminish. Inflation, what inflates, for example, if there is an asset has a $1 value inflates when it goes 1.5, 1.2, or 2, and get deflate when it goes below $1. So deflation, why it is not good and dangerous as inflation is, and in some scenarios I would say even maybe worse. Look at the economy of the Japan for the past. They had the deflation and it slowed down their economy big time. So deflation of the assets, deflation of everything in the economy will cause a recession, as the inflation caused a recession on the longer term. So the central banks, in particular Bank of Canada here, their job is to control the inflation, which is their main mandate on daily basis, using the interest rate as a tool. So now, is that a conclusion? We're going to have a large as 50 bips cut. In my personal opinion, as a former banker and a professional real estate broker, I would say yes, that's an indicator good enough if I'm a governor of Bank of Canada to react and cut the rate by 50 bips. I know everyone's talking about US interest rate cut and everything, but we know that US a little bit right now as we talking is a little bit challenging because of the upcoming election, which is 2 weeks from now, and things are happening in a careful manner. US suffering as well as Canada is, but less suffering. But the indication is, and where the banks start to cut the interest rate is one of the indication is the inflation and unemployment rate. I spoke earlier about unemployment rate, which hit in some places in Canada like Ontario, some places in Ontario 8%, on I think on average something between 6 to 7%, which is high in my opinion from the normal around four below 4% back then before the COVID and all of that. So yes, sequence of events in the economy has to occur and happen in order for the Bank of Canada to move, whether take the interest rate this way or that way. Inflation is one of them, unemployment another thing, another indicator. So once we hit unemployment high back then in beginning of this year and end of that last year, I said that's where the Bank of Canada and central bank is going to move and start to cut the rate. Now inflation is another thing. So what we see here is exactly what the other news is talking about, is Bank of Canada might cut 50 bips. So what that cut is going to do for real estate, is there is any opportunity? Is it good or bad for the buyer or the sellers? That's what our concern is here. So definitely the interest rate cut is going to be good for buyers and sellers. You got cheap money, less expensive, where the buyer will go and buy houses, get mortgage with lower interest rate on one hand. The other hand, because a lot of buyers are moving toward buying properties on a lower rate, the seller is going to sell their house faster and in better price, and the price start to grow. But I tell everyone there is nothing called general rules. You got to be careful. The general rules is all markets going to move. Be careful here, not all market. Yes, on average the market is going to move, but some pockets, some product is going to be the first. And now, in my opinion, personal opinion, because of affordability, which is the biggest talk about, everyone talks about, anything below 1 million, yes, is already on, in my opinion, on move. On move means on growth. Non-condo, I mean condo, when I say non-condo apartment, unfortunately, condo apartment for some reason, which in my opinion is the supply, are not moving well, in particular in Toronto area, because look at the cranes and number of projects are coming in and assignment and all of that. However, the the condos in some pockets where there are no a lot of competition or a lot of supplies coming, I've seen them moving with this below 1 million movement. Very few of them, for example, if you want to go look at Oakville, Burlington, Milton, Brampton, they have less and less condo apartments, and they are on slim growth and move. When you come to Mississauga, North York, Vaughan, of course, Toronto is the big one, and on Scarborough, you see the growth is not there. And in my opinion, it might take as long, especially Toronto, as long at end of 2025. However, in my opinion, Mississauga is going to be somewhere in the mid of next year. So, what next is after this cut, in my personal opinion, is we're going to see the 1 to 1.5 segment is going to move, which is mostly in our marketplace is going to be semis and smaller detached and a bit bigger detached. However, when we talk about the custom made bigger houses, which is 2, 3, 4 million above, those are going to be moving, in my personal opinion, along with the condos by end of 2025, where we see bigger cut. So we got 75 bips. We're going to get 50 bips. That's 125 bips. We need another anything between 75 to 100 bips in order to shake the market. And that is what is the target of Bank of Canada, where the mortgage rate, the variable, is something around 3 to 3 to point, let's say 3.5 to 4, or between 3 to 5. When the fix is at below 4, right? This is where the market is going to move. I'm talking about real estate market back, and not just real estate, for your information. Employment market is going to be back. Other assets like stocks, cryptos, everything's called an asset is going to be back. Keep in mind, and I said this many time and many time again, it wasn't the interest, when the interest rate is going high, it wasn't to only to blame the cost of borrowing, the reason market is gone down. I would blame equally the deposit rate, which is gone high. The GIC was at 5, 5.5, 4, 4.5. Last year, many people they locked for 100 days, 1 year, and so on, or 6 months. So when someone has an option to put his money or her money for 5% above or a little bit below, they have no desire or appetite to go in real estate with all risks and management and everything. As an investor, I'm talking here. And remember, as investors are a big segment in our marketplace. So let's assume interest rates go down, because when interest rates goes down, deposit rate will go down. So if the deposit rate today we're talking about between 4 to 5%, when 50 bips, another 75 or 50 or 100 bips, we're talking about interest rate will drop from 4 to 5 today all the way to half of that. So we're talking about 2 to 2.5. Now, 2 is not worth it. Many people, whether they have 100,000 or a million, they take their money out and they call the realtor the first, before their stock broker market or the crypto trader or whoever. They say, we want to park our money in real estate. And here where we see the movement, because again, the market is not always end user. Is people want to live in the house. We have a lot and big segment of investors. They're around. They just turn away from real estate and they're willing to come back when the time is right and in their favor. So real estate gets fixed, never die. That's what I'm trying to say. Opportunities are there. If you are an investor or first time buyer, what are you waiting for? If you are an investor, market's going down. A lot of people they need rent. Now that's another subject about rent. We've noticed rent is slightly is going down because rent is related to the interest rate as well. If the interest rate goes down, the landlord expenses goes down. They bring their rent down, meaning tenants they are willing to pay less. Jobs are not there, tenant willing to pay less, or a lot of units are there for rental and so on. But in general, rental are in shortage. So that's the news I wanted to share with you. Feel free anytime to reach out to me directly. My information is going to be below this video, and I'll try to put these two news, which most of the people they know, below this video. And I wish you success for real estate. Bye for now.